Good day Forex traders. Euro USD Forex signal, relief rally to 1.1663 possible. Bullish view. Buy the Euro USD and set a take profit at 1.1663. Add a stop loss at 1.1562. Timeline, 1 to 3 days. Bearish view. Sell the Euro USD and set a take profit at 1.1550. Add a stop loss at 1.1635. The Euro USD pair was little changed in early trading as investors continued to reflect on the recent Eurozone consumer inflation data. The pair is trading at 1.1593, which was slightly above last week's low of 1.1562. Eurozone inflation rising. Eurostat, the official statistics agency of the European Union, published the preliminary inflation numbers on Friday. The data showed that consumer prices in the bloc continued rising in September. In total, the headline Consumer Price Index, CPI, rose by 3.4% in September, the highest level in 13 years. Core CPI, which excludes the volatile food and energy products, rose by 1.6% in September. Shortly afterwards, the U.S. Department of Commerce published the latest Purchasers' Consumption Expenditure, PCE, rose by 0.4% in August, the sixth straight month of increase. On a YoY basis, the PCE, which is the Fed's favorite inflation indicator, rose to 4.3% in August. This was the highest reading since 1991. Additional data showed that America's personal income rose by 0.2% in August after rising by 1.1% in the previous month. At the same time, personal spending rose by 0.8%, which was higher than the median estimate of 0.6%. There will be no major economic data scheduled from both the EU and the US today. Therefore, investors will continue paying close attention to the latest political situation in the US. For one, the House of Representatives failed to pass the landmark $1.2 trillion infrastructure package. There is a high probability that the Senate will fail to pass the debt ceiling bill. Therefore, this will increase the possibility that rating agencies will slash the country's credit rating, which will hike the cost of borrowing. The biggest catalyst of the Euro USD will be the US non-farm payroll numbers that will come out on Friday this week. Euro USD forecast. The 4-hour chart shows that the Euro USD pair has been in a strong bearish trend in the past few weeks. The pair has managed to drop from a high of 1.1900 to a low of 1.1562. That was a 2.92% decline. It managed to move below the key support at 1.1663 last week. This was the lowest level in August. Also, it fell below the 25-day and 15-day moving averages. Therefore, after the strong bearish trend experienced last week, there is a possibility that a relief rally will happen this week as bulls target the key resistance at 1.1663. Gbp Usd Forex signal, pullback within bearish trend. $1.3577 is looking very likely to be today's pivotal point. Last Wednesday's Gbp USD signal may have produced a losing long trade from the small bullish bounce which happened to the support level of 1.3502 that day. Today's Gbp USD signals. Risk 0.75%. Trades may be taken between 8 a.m. and 5 p.m. London time today only. Short trade ideas. Short entry following a bearish price action reversal on the H1 time frame immediately upon the next touch of 1.3577 or 1.3687. Place the stop loss 1 pip above the local swing high. Move the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. Long trade ideas. Long entry following a bullish price action reversal on the H1 time frame immediately upon the next touch of 1.3527, 1.3502, or 1.3411. Place the stop loss 1 pip below the local swing low. Move the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Gbp Usd Analysis. I wrote last Wednesday that the technical picture had become more bearish, hitting a new 8-month low price. I expected a high probability of a down day on Thursday, with 1.3560 as the best candidate for a short trade entry. This was an accurate and profitable call, as the Thursday was a down day, although the day's high was put in 6 pips below 1.3560. Friday saw a strong bullish reversal after a long-term low price was reached at 1.3411. The bullish reversal has been enough to disrupt the bearish trend, but as the USD is strong, the trend still looks valid. Bulls and bears are quite evenly balanced over the short to medium term, with key support holding at 1.3527, and key resistance holding at 1.3577, the latter looks likely to be today's pivotal point. I see the best strategy for trading this currency pair today as waiting for 2 consecutive higher hourly closes above 1.3577 to trigger a bullish bias, or 2 consecutive hourly closes below 1.3527 to trigger a bearish bias. If a bearish bias is triggered, traders may find that going short of the Euro-USD currency pair to be better than being short of GBP USD, as the technical picture in Euro/USD is more bearish. As there are no major data releases scheduled today and as Monday is typically a quiet trading day, it may be that we don't get much from a breakout even if it does happen today. Aud USD Forex Signal, steady climb towards 0.7300 likely. The pair will likely keep rising as bulls target the next key resistance at 0.7315, which was the highest level on September 28. Bullish view. Buy the AUD USD and set a take profit at 0.7315. Add a stop loss at 0.7200. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 0.7235 and a take profit at 0.7150. Add a stop loss at 0.7300. The AUD-USD pair held steady ahead of a relatively busy week in the financial market. The pair rose to 0.7275, which was significantly higher than last week's low of 0.7170. RBA interest rate decision. The AUD-USD will have several key events this week. The most important will happen on Tuesday when the Reserve Bank of Australia, RBA, concludes its 2-day meeting. The central bank is expected to leave interest rates unchanged at 0.1%. At the same time, the central bank will likely sound hawkish now that Australia has managed to contain the new wave of the pandemic. Still, the biggest concern for Australia is that China, its biggest market, has started slowing down in the past few months. Industrial production has declined in the past few consecutive months. Data published by Cakeson last week showed that the country's manufacturing sector was starting to cool down. In addition to the RBA decision, the AUD/USD will react to the latest Australian retail and trade numbers that will come out on Tuesday. The numbers are expected to show that retail sales remained under pressure in August as people in Victoria and New South Wales, NSW, remained in a lockdown. Meanwhile, investors will keep watching the key developments in the United States where Congress failed to pass the bipartisan $1 trillion infrastructure package. This happened as moderate and progressive Democrats struggled to agree on the best way forward. Other key issues that will move the AUD-USD this week is coal, whose price has risen substantially in the past few weeks. The price will likely continue rising as India's reserves continues to shrink. The pair will also react to the Australian and US services PMI numbers scheduled for Wednesday and the non-farm payroll numbers scheduled for Friday. AUD-USD forecast. The AUD-USD pair held steady in the Asian session. It is trading at 0.7275, which is slightly above the 61.8% Fibonacci retracement level. It has also moved above the 25-day and 15-day moving averages, MA. It has also moved slightly above the important support at 0.7235, which was the neckline of the previous double top pattern. Therefore, the pair will likely keep rising as bulls target the next key resistance at 0.7315, which was the highest level on September 28. This view will be invalidated if the price drops below the support at 0.7230.